Gold and silver crash hours before the union budget. Investors reel as prices plunge up to 9% on MCX. Markets are witnessing a sharp shock as gold and silver prices plunged sharply just hours before the union budget 2026. On the multi-commodity exchange, gold fell by nearly 13,700 rupees per 10 grams to 1,38,634 rupees, while silver dropped by 26,273 rupees per kilogram to 2,65,652 rupees. This comes after a brutal two-day global sell-off that saw silver fall as much as 37% intraday last Friday and gold tumble 12% in the international spot market, the biggest single-session drop in gold since the early 1980s and the steepest ever recorded slide in silver. The crash has added fuel to ongoing speculation that the government may reduce import duties on bullion. Currently, gold and silver bars attract about 6% customs duty and 3% GST, totaling roughly 9%. Traders are now watching closely to see if the finance minister will cut the duty further, which could lower domestic gold prices by Rs 2,000 to 3,000 per 10 grams and silver by around 6,000 rupees per kilogram. Analysts point out that the sell-off was driven by multiple factors: profit-taking after record highs, a stronger US dollar, and global panic following reports of a hawkish Federal Reserve chair pick all triggered extreme volatility in precious metals. Gold and silver ETFs were hit hard, with some dropping up to 16%, while MCX shares slid as much as 10% and even hit lower circuits. Experts advise caution. Tapan Patel, fund manager at Tata Asset Management, says that while silver has the potential to enhance returns due to its industrial and investment demand, its historical volatility makes it suitable mainly for tactical or staggered investment rather than large lump sum bets. Investors holding allocations in gold and silver are encouraged to watch the gold-silver ratio and consider rebalancing portfolios to manage risk. Despite the fall, January still ended on a strong note for both metals. Gold rose over 20% for the month, while silver gained more than 30%, highlighting the long-term demand for these safe haven assets. As markets reopen amid the Union Budget 2026, all eyes will be on potential changes in import duties and government policy, which could determine whether this sharp correction turns into a buying opportunity or continues to pressure India's jewelry and investment markets. In short, gold and silver have seen historic volatility, and Budget Day could be a defining moment for bullion traders and investors alike.